So we're going to dive into the future of sustainable investments, and we're going to do that together with Fifth Wall, and on the other side in Europe, we're going to do it together with 2150. So we have
major players, right?
Yeah.
Yeah. Really exciting. Sorry.
Yeah, no, you have the storyline.
Oh, I do have the storyline.
The introduction.
Yeah. So we have the real estate industry is the world's single largest contributor to climate change. We are going to talk with Fifth Wall and 2150, two major funds in America and Europe, what opportunities lie in the convergence of climate technology and the built world. So there's a lot of talk about this. There's a lot of funding. Governments are getting behind this, and I'm so excited to hear what these guys have to say.
Me too.
Way. Yeah.
So we have Greg Smithies and we have Jacob Bro. Are you here?
Yep. Yes, indeed.
Yes.
Hi, guys.
It's great to have you both with us. You have probably the first question, or not?
I do. I get. Okay. As said, okay, so real estate is the world's single largest contributor, but that is not really clear to many people within the built world. Real estate is about bricks and about making money, but now we also need to look into sustainability and to decarbonize. What would your reaction be on this?
Yeah. Who wants to start?
I'm happy to go. I think my reaction was, and I can speak from personal experience because I knew relatively little about real estate 3 years ago, when I met a Dutch entrepreneur who had spent 10 years after meeting Al Gore trying to build the most sustainable tech-enabled real estate to really help the environment and create a better experience for people in buildings. It's more safe and productive and healthy. And when I saw that 40% or so of the whole problem of emissions is kind of stemming from either how we build or how we operate real estate, that was, I think, was quite surprising to me. But it kind of makes sense when you start to look into it. And my response to that was to change my mind, because I had initially thought that I could not really help a company like that who was asking me for taking my experience from technology, from venture, from product development engineering, and take that into something like real estate. I thought that was kind of like probably not something I could help with. But when I realized where the company sits in terms of its impact, its potential, and the possibility of taking the built environment from being sort of like a very big part of the problem to becoming a very big part of the solution, and all the technology that is ready to actually go to work, if you can combine the ideas, the capital, and the great entrepreneurs, the people, towards that purpose, that sort of got me really excited to actually look into this space, and ultimately led me on a journey to start 2150 together with my partners and raise a fund of sort of the size and focus where we think we can really help the nascent ecosystem that's building in Europe in particular, to kind of take on that challenge, which is one of the big problems we have to solve, and which is now becoming increasingly imminent because of the way that regulation is changing, the way that the whole stakeholder landscape is reacting to this challenge and to this big opportunity, as it also is, because we're talking here about some of the world's largest economic domains that are going to undergo a radical transformation in the next 10 years. So we think it's the place to spend. It's the biggest vector of going to work towards sustainability, and one we feel very excited about trying to help bring into the future.
Well, yeah, that's a great reflection, Jacob. And how do you see that, Greg?
I mean, I'd agree with a lot of that, Jacob, and thanks for leading off there, because I think you laid a good foundation here, which is most people don't realize that buildings are 40% of all greenhouse gas emissions. Most people think that it's transportation is the big bad wolf here, and it turns out it's buildings, right? And I was coming across, before I came to Fifth Wall, I was at BMW iVentures, and I was running their climate investing practice and trying to decarbonize transportation, right? Whilst decarbonizing mobility and transportation is not easy, it is simple. It's basically electrify the vehicles. Whereas the problem with buildings is that you've got the world's largest asset class out there, right? It's $270 trillion of buildings out there. To put that in perspective, the entire internet is only about a $1 trillion market, right? And so that is simultaneously gives you why this is such a large problem, because there just frankly are so many buildings out there, but also why it's such a large opportunity. Yep, exactly. It's just massive. And so what really gets me excited and why we as Fifth Wall, you know, we're the world's largest venture capital fund that's focused on the real estate industry. We've got about $2.5 billion under management. And very rapidly, we actually think that climate investing is probably going to be the largest category of investing that we do, because this asset class is so large that if we're going to hit any of the dates to decarbonize, 2050, 2060, 2070, you very rapidly see that we as an industry need to start spending somewhere between $2 and $5 trillion per year in retrofitting buildings and new construction materials to make those buildings decarbonized, right? So this literally might be the largest venture capital opportunity in history.
Well, that's amazing, but not a lot of real estate professionals see it that way yet, or do they?
Yeah, I've had a conversation not that long ago where someone said, "Don't say sustainability, say building performance," because everybody's scared of sustainability, and I feel like maybe things are changing, but you guys would know.
Well, I think if you look at the sorry, Jacob, if you look at the three things that any real estate business cares about, right? They care about their tenants, they care about their cost of operations, and they care about their cost of capital. There are pretty much only three things that real estate businesses care about. And what's happened over the last couple of years is the tenants, meaning the big corporations who are inhabiting all of these buildings, they've all gone and signed climate pledges, right? So if you've got Siemens or Coca-Cola or Microsoft as one of your tenants, they've signed a climate pledge, and now they've gone and looked at their carbon accounting and figured out that buildings are one or two on their list of things that they need to fix. So the tenants are demanding it. But at the same time, as Jacob mentioned, we've got regulations coming through. Here in the US, we've got Local Law 97 in Manhattan, which is going to cost landlords $10 billion per year in fines if they don't decarbonize their buildings. But most importantly is actually the cost of capital, because as we all know, the entire real estate industry runs on what is the interest rate on my mortgage, right? You know, $1 billion building times by X% interest is basically the entire business model of the industry. Yeah. And there is a delta here between the cost of capital for a clean building versus a dirty building. In the United States right now, it is 50 basis points. It's about 0.5%, which doesn't sound like a lot, but $1 billion building times by 40 years times by 0.5% is a significant amount of money. And so those three things together is what's really driving this industry to start moving.
Yeah, I would agree. And that delta is that spread is going to rise as the cost of polluting is going to be more and more substantial and enforced to a high degree. And the curious thing is actually that if you go back maybe like 4 or 5 years ago, you would probably not have many conversations in real estate where you would realize that this industry is maybe even moving faster than some other industries. But I think that in a way, the most laggard sector in the world is becoming a prime mover actually, and at least one of the earlier adopters here because of sensitivity and because you're in the shooting line as a real estate owner or big tenant or investor, because the regulatory scrutiny and the customer demand is hitting you very hard due to the very big footprint. So it's very obvious to everyone that real estate and construction has to change, and therefore you're also going to be hit very soon. And the industry is, of course, very concerned about these three factors that Greg mentions that are obviously sort of like the bread and butter and the livelihood. And if you can see that coming under threat, you know, you're going to see the capital structure changing, and you're going to see response. So I think what we have to do as venture capitalists, as entrepreneurs, that is basically to help this industry to get there faster, because the industry has also been, is suffering from a shortage of talent, of experience and knowledge when it comes to technology. And this is why we also see that there's a great interest from investors and participants in the real estate industry to be sort of like to partner up with funds such as Fifth Wall and ourselves to help them basically get there and be able to adopt faster. And we see it already that the big players, I mean, they're doing shadow pricing. They are starting to measure and show their employees, what is actually now the profitability of this project I'm doing, had there been a fully enforced price of carbon. and that like double bottom line is introduced because these guys, they know it's just a question of time. At some point, they or their customers are going to pay.
Yeah, somebody's going to pay. Somebody's going to pay. So you talked about a couple of things, and one of those things is, of course, that tenant, the big tenants that are going to change. But in the consumer industry, well, you and I are maybe selecting a different kind of car, like you said, Greg, maybe an electric car. But are those consumers, like you and me, that are also using buildings, also going to have an impact on this change?
Yeah, I can maybe start here, because the US is very different from the European market here in terms of single family homes, right? The percentage of single family homes that we have in the United States is much higher than in Europe. And single family homes, just by definition, are much less efficient. And then simultaneously, we have a bizarre situation where a lot of energy costs in the US are much cheaper than Europe, right? And so what we have is kind of like a self-fulfilling prophecy, which therefore means that lots of people in single family homes with cheap energy means that they don't necessarily care a lot about energy efficiency. And so what is that's been historically true. What is definitely happening now, and we've seen a massive push here by the new president and the new Blue Senate, is we're seeing very large tax incentives and new investments into infrastructure, and a lot of the money, the $2 trillion infrastructure package that was announced a couple of months ago, $200 billion of that is going into building efficiency, right? It's a significant amount. That's the same amount as went into, say, the Apollo moon landings. So I would say generally as consumers, you can realize, hey, am I in a single family home? If yes, my house is probably just by definition less efficient. And therefore, can I go and look at putting solar panels on the roof, switching to a heat pump, things like that. And then what's fantastic here in the United States, where we're playing catch up to Europe, is now we have the tax incentives in place that you can get a lot of money back if you go and install solar panels or go and install a heat pump. That significantly brings down the cost of those technologies. So there definitely are things that consumers can do today in the US.
Yeah, I would agree. I think there's a perfect storm right now in the US that is driving a very needed transformation of the single family home segment. In Europe, where you have less of that, you still have quite a lot of single family homes. So it's not that they don't exist. They're generally a bit more energy efficient on average because many of them are in colder environments, and energy prices is like a big driver here. Governments have also been more concerned about energy efficiency for a long time. I think those standards have more been set by Europe than other places. But if you look at the tax burden on the energy bill across a lot of European countries, I mean, you realize that the net price of production of energy you are paying is like a fourth maybe of the full energy bill that you are paying per kilowatt hour, and that provides a huge incentive for behind the meter electrification, installation of solar rooftop production, combined with battery storage and the next layers of technology that allows you to become independent and a cost-efficient consumer producer of energy at the residential home. Germany is a perfect example of that, with very high taxes and strong incentives, and that is driving I think quite a strong wave of behind-the-meter adoption in Europe as well. So we see that too on the consumer side.
Yeah, so we have like you said, Jacob, a perfect storm, because all kind of combinations and factors are driving into the right direction. But what kind of, you're sitting on a stack of money that you can invest into all kind of solutions, but what kind of investment challenges on one side and opportunities on the other side do we have right now in the built world?
I mean, the beautiful thing is that there is, I think, unlike maybe 5 years ago where this was a more nascent space, I think back when Fifth Wall got started in US, it was a 200 million fund similar to our size here in Europe, our first fund. And I think arguably in some sense, US has been ahead in terms of PropTech, but I think in terms of climate sustainability related real estate technology, construction technology, it's probably more like a balanced field where Europe is also very much leading. So I think the beautiful thing is that what you need for this to happen is a sort of a high enough density of ideas, people, and capital flowing together towards solving these problems, while the regulatory framework is providing the stable and basically platform and the right incentives. And I think this is really happening, right? I think the share of second time, third time, really great entrepreneurs who are building their next company in the sustainability space and who are looking at, the big problems and, finding out that real estate and construction is a very big part of the issue. We're seeing more and more of that. So the last 2 years of us preparing this fund, we've seen a big shift already, not just on the capital side as we discussed, but also on the entrepreneurial side. So there are lots of entrepreneurs that are looking to solve problems here. So that's great. I think there's a lot of supply. There are certain challenges around investing into this and innovating into this area, because unlike some other sectors where you might have a pure software update, that's not always the case with the physical reality. Once in a while there's a bit of IoT hardware, there's a messy, fragmented physical world that you need to deal with. I mean, if you start to understand how a rooftop solar installation is actually done end to end, you realize that's kind of a nasty process with a lot of variety, and it's hard to standardize. So you need to be very mindful, of course, of capital efficiency, time to market, and choosing and investing where you believe that venture capital is the right accelerator at the right point in time where you can have an impact. And I think that what we believe in, and I think what is also part of the fifth wall strategy, is to have partners who are part of the industry who can accelerate that adoption, because they are looking for the recommendation as to where to pick the right solutions for these problems that they're all facing. So we're very confident about this, the supply of great opportunities. And it's about knowing you need to understand this industry from the inside to invest well into it, and to have a good network where you can help your entrepreneurs to grow into the market. But we feel very confident about it.
Yeah. And how is that for you, Greg? The challenges and the opportunities, where do you see them?
Yeah, so I'll start with the opportunities, because as a venture capitalist, I have to be optimistic, right?
Always.
The opportunity here is that actually 50% of the problem we can pretty much solve with existing technologies. And the opportunity here is that means that, unlike 10 years ago, when a whole lot of people lost billions of dollars in clean tech and the things that, at the time, this time around, there are technologies that are either already baked and we can invest in them just to accelerate how quickly they get to market, or they are very, very close to being fully baked. And so we can get their CapEx payback periods down and get them over that sort of cost hump to the point where they make sense from a pure capitalistic market point of view. And that accounts for about 50% of the opportunity. So if we think about this, 40% of all greenhouse gas emissions coming from the real estate industry, we can take care of half of those with technologies that currently exist, right? So that's a fantastic opportunity.
That's good news.
Very different from, that's very good news, right? Very different from where we were 10 years ago. Now, the challenge is the other half, right?
But the challenge,
other half, that's the challenge. And these are some more science fiction-y type technologies, right? We need to go and suck CO2 out of the air and do interesting things with it, right? Can we suck CO2 out of the air and turn it into concrete, turn it into plastics, turn it into oil, things like that. And so the challenge here is going to be figuring out judiciously how to split our dollars, right? Or our money in our investing, between going and investing in the things that we can install right now and hit all the low-hanging fruit, but without starving all of the more science fiction things that we do still need to invest in, because we need them to solve the other half of the problem in 10, 20, 30 years time. Mm-hmm. So we do really need to be judicious in how we're thinking about spreading the dollars between these two buckets.
Yeah, I think that's a good point, right? And you need to take some outlier bets here on some pretty fascinating ideas that are very scientific in nature and very nascent. And there are even some of the largest opportunities to even drive down CO2 and take CO2 out of the atmosphere. I mean, it was really on a basic research level, and they might become scalable at some point in 10 years from now, right? So maybe that's a subject for a second fund, for us at least. But we have a long-term mindset here, and it's a long-term challenge. And I think it's what is really important here to understand, I think, for everyone, is that time has an opportunity cost, right? So we need to do everything we can to buy time and to have as much impact in the time where we are now. So the low-hanging fruits that Greg speaks about, and also making sure that we are accelerating these like big levers that are sitting more at the frontier of innovation, that have to come together and have to be, we have to do a lot of experimentation at the frontier of technology here to get there. And I think it's not just VCs, it's also public funding of basic research, it's industry. So there's a lot of moving pieces here where we need to plug in with our model at the right time, and that's why we're here. And we at least we feel that there's so much moving at different stages of innovation here that there will be a great opportunity to invest both in the low-hanging fruits and in some of these moonshots that also have to be funded.
Can you talk about that timeline a little bit? So where are we now? How quickly do we need to move? When does science fiction technology need to come in? What do we need to do in the next few years, 5 years, 10, 20 years? Can you give us some context of that, both of you?
I mean,
sorry, go ahead, Jacob.
I mean, I can start with the high level. Maybe Greg, you can speak more to the industry. We can try to divide and conquer here. But I mean, we yesterday had a sort of like an inspirational session with several colleagues, with Sir David King, who used to advise the UK government, or two of them, on climate policy, and is now driving research. Right, and we had sort of like a kind of like, what's the latest from the frontier of understanding how quickly this moves and what has changed in the recent years in terms of our predictions of where this is going. And the message was pretty clear, right? I mean, if you look at the forecasts of sea level rise that we used to have, right, they have been accelerated quite a lot. So now if we look at 2050, which is only 3 decades away, the entire Vietnam is going to be gone. The biggest rice paddies in the world are going to be gone. 100 million people are going to be on the move there. So much sooner than you expected. So, I mean, I think what is the problem is basically that the polar ice is melting much faster because the positive feedback loops from the already melted water is intensifying. So you don't get the re-icing basically quick enough. So you need to do some pretty dramatic things, probably, including artificial clouds over the Arctic to maintain the ice over the summer period. So there are lots of like super high scale scientific carbon removal strategies that need to go to work, and they have to come at a faster pace. And I think if we talk like 10, 15 years in the future, we probably need to remove 30, 40 gigatons per year from the atmosphere if we can. Maybe a little bit less, but we need to get to that level. And to give you a sense of proportion, humanity outputs around 51 gigatons per year today. So we need to like rapidly reduce and create energy efficiency and reduce emissions of what we're doing today. But we also actually, on top of that, we need to take out massive amounts of CO2 emissions already emitted in the atmosphere, especially methane, for instance, which is it's a much more powerful greenhouse gas than CO2. So there are different buckets, and I think we are more in the business of accelerating the low-hanging fruits and accelerating that decarbonization of the economy, where there's also like very strong economic incentives to do so right now. But we always keep an eye on what is sort of the next frontier of technology that we might be able to fund down the road. And I think we just need to be mindful that the entire system has to work here.
Yeah, I 100% agree with that the entire system has to work here. And because what you ultimately don't want to do is you don't want the low-hanging fruit that you're buying right now to paint you into a corner that prevents you from actually hitting 100% with the other technologies that are coming down the line. So here's a good example of that. It's not a real estate example, but it's cromulent, which is in the energy industry, right? If we say our only goal is to decrease CO2, we could switch from coal-fired power plants to natural gas-fired power plants, and we would actually see a meaningful dip in CO2. But that's not going to get you to zero, right? Because then you just end up with a whole bunch of natural gas-fired power plants, right? As opposed to what the correct strategy is, which is go to renewable energies and solar and wind and things like that, which actually do have a path to zero. So the real risk here is you don't want to be buying technologies now for an incremental decrease, but that then prevent you from ultimately getting all the way to zero. So in the real estate industry, this might say, hey, I'm going to switch from an oil heater inside the basement of my building to a natural gas-fired heater inside the basement of my building. That is not the right logic. You should be switching that out for a heat pump, even though that heat pump right now is far more expensive. it's ultimately going to give you line of sight to actually getting to zero, as opposed to just being a small sort of step function down.
Reminds me of that Dutch phrase, the goedkoop duurkoop.
Yeah.
Means a cheap buy is expensive.
In the end.
Yeah.
Yep, exactly.
Yeah.
Yep.
So there is a lot to be done. For real estate professionals are not always into these new technologies, new solutions. They're more into bricks and not into these kind of changes. But you both also try to advise these real estate companies as much as you can. What would your best advice be to real estate professionals, what they can start doing tomorrow to decarbonize their real estate?
Jacob, you can go ahead.
So I think in the beginning, you need to think about people. I think you really, first you need to set ambitions, right? And before you set ambitions and targets, it's hard to move because then you don't allocate resources. I think it's about setting ambitions, getting people inside the door, inside your organization who actually have a different background. So I think that matters. I think to the extent that it makes sense to partner up maybe with investors like us to basically get a view of the frontier of the market and get a filter on that innovation that's happening, and some guidance on how to choose and adopt. That can be sort of a bridge towards the place where you can become fully independent and become more of a technology, high affinity, organization. So I think it's really about people absorbing knowledge, setting standards, setting targets, and then starting to measure. I think really starting to measure what you actually are emitting, and starting to go not just to level 1 and 3, but going to scope 3, embodied emissions. And this is big challenge in this industry. Once you start to identify the hotspots, right, then you can start to make change. But before you start measuring, you won't really know. So I think those are probably the sort of 3-4 ingredients I think are most important to get started with.
Yeah, and maybe just to wrap up, I'll go back to how I started this out, right? Which is we as an industry, everybody understands dollars and cents and making money, and very rapidly clean buildings are just a no-brainer when it comes to running the real estate business, right? Clean buildings attract higher quality tenants. You can charge higher rent for them. They're cheaper to operate. They're cheaper to finance, and you avoid fines, right? Like there's literally no other reason that anybody in the real estate industry should care about this. It's just better for business. And the faster people realize that. And if you don't realize that, you're just going to get left behind by the people who do realize it, right? It's going to be that building down the street that now all of a sudden is attracting all of the highest paying tenants because they're clean and you aren't, right? So I think the market moving hand is going to move pretty quickly here. And the people who see this as an opportunity as opposed to a crisis are going to end up kind of like Tesla, right? We've seen Tesla's stock price versus all of the other car manufacturers. You would love to be the Tesla of the real estate industry, right? You don't want to be the General Motors, of the real estate industry, right?
So who is going to be the Tesla of real estate? Do you see already some companies in your portfolios that make a chance of being that Tesla?
Jacob?
So in general, I think there are going to be quite a few Teslas because this industry is huge. It varies a lot by region in the world. You can build a pretty significant company in just a single market like the UK, obviously in a big market like the US. So I think it's also, it's local in nature, right? You have the physical asset is we call it Immobilien in German, right? It doesn't move. So in that sense, I think there will be many winners in this, and you might have national and regional champions coming out of that. They're going to be really big potential companies. We can call them Teslas or not, but I think that's the beauty of this, that it's such a big opportunity. Of course, you do have network effects, but you don't have the same liquidity of the underlying industry and customer behavior, so that you necessarily always get these winner take most kind of outcomes that we've seen in marketplaces, in consumer tech, and in some software businesses. So I think I'm very optimistic about actually we will see many great outcomes, and we actually have to finance many great outcomes around the world.
Yeah, and then I think, from outside, we work with about 70 of the world's largest owners and operators and developers of real estate. And I'll harken back to actually one of the case studies that we have in the prop tech space, because I think the climate tech space is going to go very similar to this, right? So Lennar is one of the largest home builders in the US. And they partnered with us on a mission to turn themselves from being seen by the markets as just a home builder who's just shifting homes to more of a technology enabled company that is getting more share of wallet of the people that they're actually selling homes to. Long story short, fast forward a couple of years, we partnered them with Open Door so that they could sell houses faster. We partnered them with Hippo so that they could get a share of wallet of the insurance on the house, and a whole bunch of other services. That process roughly doubled their trading multiple, so their stock price, essentially went up 2x. It brought in about $1.5 billion of new revenue top line to the business, and it brought in about $1 billion of profits from the investments that they've made alongside us. Right now, that's inside prop tech. But if you ever think of how much software can you put into a building, $1 billion building has maybe $30 million of software inside it on a good day, right? Whereas when it comes to climate tech and the things we're talking about investing in, the new concrete, the new steel, the new HVAC systems, $1 billion building literally could have $1 billion worth of climate tech in it. So the markets we're talking about here are just so much larger. So if we can, with prop tech, go and double the valuation of a company, give $1.5 billion of revenue to their top line and $1 billion of profits from investments onto their balance sheet, just imagine what we can do with climate tech, right?
Yeah. Well, I think that gives a lot of power to people that are listening right now, because the opportunities are so huge. Well, let's create a better built environment together, because it's possible.
Absolutely. Yeah. Thank you, guys. Well done. Very inspiring.
Yeah, very inspiring. Thank you very much, Jacob, and thank you very much, Greg. Bye-bye.